You are listening to Seven Horns AI, your AI-powered market briefing. Let us start with a look back at an eventful week in the markets, starting with Monday, June 8, 2026. The Seven Horns AI platform successfully validated its 70% probability buy the dip signal from earlier in the week. By Friday, the S&P 500 exchange-traded fund was little changed, edging slightly higher by 0.34% over the 5-day window, closing at $741.75, up from its weekly open of $739.22. Tech was modestly higher, with the Nasdaq finishing Monday up 0.9% to close around 25,930. But the biggest story of the week, and indeed the largest initial public offering in history, was the launch of SpaceX on Friday, June 12th. SpaceX priced its offering at $135 per share, raising $75 billion and valuing the company at $1.77 trillion. On its first day of trading, the stock rocketed 19.2% to close at $160.95, pushing its market value past $2.1 trillion. Now, moving on to the math behind this astronomical valuation. While the market is paying over $160, our Seven Horns analyst report puts the fundamental business value of SpaceX at just $48 per share. This leaves a staggering $112.95 per share, or about $1.48 trillion in total market value, unexplained by traditional metrics. We break this down into a few key speculative layers, including an Elon Musk reputation premium of $50 to $65 per share and an index inclusion front-running premium of $18 to $25. Speaking of which, 3 major index providers are set to force an estimated $22 to $30 billion of passive buying into SpaceX over the next 2 to 3 weeks, including FTSE Russell on June 26 and Nasdaq on July 3. However, because only 7% of SpaceX shares are freely trading, this massive wave of buying is hitting an incredibly small supply, but do not expect the S&P 500 to join the party anytime soon. They have rejected fast-tracking the company, which is currently deep in the red, posting a net loss of $4.94 billion in fiscal year 2025 and a $4.28 billion loss in the first quarter of 2026 alone. With Starlink average revenue per user falling from $99 to $66, and Elon Musk holding 85.1% of the voting power, our report maintains a reduced rating with a target price of $48. Forced passive buying might create short-term volatility, but long-term investors should tread carefully. That is your weekly market update for Saturday, June 13, 2026, from Seven Horns AI. This has been a Seven Horns AI production. For more insights, visit us at Seven Horns AI.